Wall Street certainly nursing a hangover today following the Dow hitting that milestone 20,000 mark last week. So much for that, huh? Joining us now to discuss it all is Smead Capital Management CEO Bill Smead. Bill, so what is all this about today, do you think? Is it the political turmoil surrounding Donald Trump, or is there something else at play?
Well, there's certainly always a lot of turmoil early in a new administration. I would like to remind everybody, since we're long-duration investors, I always think about Ronald Reagan's first year and a half as president. He came in with a lot of very similar ideas, and in the first 18 months, the market was down about 20%. But if you were optimistic and bought in and stayed the course for 7 years, you made a 170% gain in the Dow from when he took office to August of 1987. So you've got these cross currents. I think people should focus on where economic needs are being met and where common stocks are undervalued.
Let's talk about stock picks. You like the healthcare sector, right? What in particular?
Well, you know, we're contrarians. We like John Templeton's point of maximum pessimism. So everyone's afraid to touch the healthcare right now because President Trump has not had the biotech and pharmaceutical executives into the office. What he does is he brings these folks into his office. He says, you guys have done wonderful things. I'm very proud of you. I've got a problem, and his problem is he'd like to tell people that he could cut their prescription costs. And then he's going to ask the executives of these companies, what could I do for you in trade for that? And that conversation hasn't happened, so we're in the maximum uncertainty right now. So we very much like an Express Scripts for those kind of reasons.
Very good. Of course, we got a huge earnings week this week as well, Bill. If we do well on the earnings overall and the guidance is generally positive, do you like these prices? Are these stocks fairly priced?
That's a terrific question. We broke the S&P 500 index down to 5 PE quintiles, lowest 100 to highest 100, about 4 or 5 months ago. And unfortunately for investors in indexes, the 100 most expensive stocks are the most expensive to the market and to the cheapest they've been any time since 1999-2000. So the problem is there are a lot of very expensive, very exciting, very pioneering tech stocks out there. The problem is that they don't offer compelling value because the history of the United States stock market is all of those very popular stocks go through the PE ratio divorce.
Bill Smead, Smead Capital Management CEO. Thank you, Bill.